All right, we want to welcome back Chris Vermeulen with The Technical Traders. Chris is a wonderful guest and has a broad perspective on global markets and the economy as a whole. We're going to talk about Bitcoin, we're going to talk about the markets, the economy, and then we have a special project that Chris is working on for entrepreneurship for kids that we're going to talk about at the end. So Chris, welcome back to the show. It's great to see you again.
Yeah, thanks for having me, Greg.
Absolutely. So what do you have for us today? You want to talk about Bitcoin?
Sure. Yeah, let's take a quick look over there. There's some interesting price action going on in Bitcoin that actually I think carries over to the financial sector of stocks themselves. So let's take a look here. So Bitcoin really hasn't changed much since last time you and I talked. We obviously had this huge parabolic rally, which you can definitely see when you take a look at the weekly chart of Bitcoin. You can see that it's in bubble phase, huge hockey stick shape, which what goes straight up usually comes straight back down for half the move, if not more. And this type of parabolic move in Bitcoin has happened 6 times in the past. Each time it's averaged about a 76, 74% correction. And really we're only down about 54%. So there's still more downside potential in Bitcoin. The daily chart gives us a good view of kind of what the shorter term price action is. It is hanging on to a thread above this $30,000 level. If we were to just use some basic Fibonacci extension tools to give us an idea where support next downside targets are, if it does break down, we're looking at potentially more or less 23,000 for Bitcoin. And if it breaks that level or more or less bounces off that level for a little bit, that's going to tell us, hey, that momentum target is accurate. And then if it starts to roll back down and breaks below that, then it's probably going to go all the way down to 11.5, which is a dramatic sell-off. I'm not saying it's going there. I'm saying if it breaks down, that's where the 2 key levels are to look. And that would definitely cleanse the market. That would bring it back to a typical Bitcoin correction. And then all the ones in history have taken a year or longer to trade sideways and build a new base, which if we were to futures don't go back that far. But all we'd be looking at is more or less the market to collapse, and then it'll eventually just build some type of base, and then eventually potentially go up and hit 100,000 plus going forward. I mean, it's still in a crazy upward trend when you look at the long-term chart of Bitcoin. So that's kind of where we are in the short term. I do think there is potential here. It is trying to carve out a bottom, and if it starts to break this high around 36,500, that'll be a very good sign. But then if it can close above 41,200, somewhere in that area, that'll be the sign that, hey, this is starting a new uptrend. It's breaking out of this bottoming formation. This does look very bottomish in terms of the chart pattern. So it's trading in this pattern, and everybody wants to know, do I buy it or sell it? Well, the way I see it is it's stuck in this pattern, and you don't really want to get involved if you're a short-term Bitcoin trader, just because whichever way it breaks, it's going to be big. And it's kind of a 50-50 bet at this point. So obviously testing this lower level. But what's really interesting with Bitcoin, let me just rescale this here, is we've had this really strong run up in Bitcoin. And then we had this initial breakdown. And this initial breakdown is, it does a lot of technical damage. So this drop not only broke through the 20-day and the 50-day, but it also broke a previous pivot low here. It broke another pivot low here. And the way that I look at the markets is through a technical standpoint, price action, trends, momentum. And when there's enough downward momentum to break 2 support levels and just smash through them, you got to be really aware that could be a trend reversal. And I talked about this. I wrote some articles saying this looks like a very bearish pattern that points to a continuation move down, which it ended up resolving to the downside. And so we are in a downtrend. Bitcoin has dropped more than enough. It's in a bear market. And now it's in this bottoming potential stage where we just need to see if this is a consolidation before it continues to go lower, or is this the base before it starts to go higher. But take a look at this bearish price, Greg. If you look at this breakdown, this momentum, that is actually happening in the financial sector. There's been a lot of news in the financial sector. If we take a look at XLF.
Before you leave that, go back to that one time real quick. So here's the big, I think, misunderstanding in the space and with what's going on right now, specifically with Bitcoin. That right there that you just pointed out is your blow off top. So a lot of people say that this market, that this cycle, we haven't had a blow off top because of the, the false upthrust that we had. There's your blow off top in Bitcoin right now for the 2021 bull market cycle.
Yeah, let's actually just take a quick peek, see what the monthly chart shows out of curiosity. Futures do not go back that far. Let me just clear some drawings. Yeah, so obviously it came all the way up, stalled with some big volatility in the big range, and then clearly came down. So yeah, I would definitely say that was a blow off top, and then it cracked to the downside. So that's, yeah, I think you're spot on there. Now, if we just flip back to the financial sector, we've had good earnings with the banks. The banking sector has been, or the financial sector has been on fire, just like Bitcoin has. And we had this break to the downside. We've seen really good earnings out of banks, yet banks have dropped. They've broken a couple support levels here and both of these levels right across here. So it's broken 2 support levels, smashed through them like Bitcoin. And now it's forming what looks to be a bear flag that technically could resolve to the downside. And using Fibonacci extension, we can get an idea of this momentum as well. How far down could XLF go based on this? You can see it's 33.79 is where a full 100% measured move would be. Based on where price is today, since you and I are talking, it's about a 7-8% drop in the financial sector, which will definitely, put a very negative bias. A break of these lows here are going to send shivers through the traders and investors' minds. It's not a good sign when the financials are actually underperforming and breaking down, especially when we see bonds doing really well. Utilities are holding up. We're seeing gold hold up as well. There's big money, I think, is shifting. I think a lot of people see a really ugly picture looking forward. And I think the stock market is close to a 5, 10, maybe even a 15% correction. And the financial banking sector is kind of hinting that things look like they're going to be kind of shaky. And that's not good for financials, which is why they're still underperforming given their good earnings.
Yeah, it's very interesting. And, some banks are up, some banks are down. Some did not have a very good quarter of earnings. So that's really interesting to look at. The other thing with this chart that you're showing here, this looks very familiar across a lot of different assets, and especially in the crypto market. All of Bitcoin, Ether, a lot of the altcoins all look similar and have a similar looking pattern in this time frame right now.
Right.
Yeah. Some of them have been identical in the last couple of weeks. When you look at the downward sideways action that we've seen, and even specific to certain jumps up and down on certain hour timeframes, it's across a lot of different assets. It's really interesting.
Yeah, I find Bitcoin really is kind of like the ocean tide. If it's going up, it's going to be pulling most of the stocks or most of the other cryptos with it. If it's going down, it's kind of the main mental mindset shift. And I like to watch the SP 500 for that reason for the stock market. But yeah, whichever way the tide is going, you want to make sure you're trading on the side of the tide. And, you look at the stock market right now, you look at the Russell 2000, look at the Russell. It's had a huge run, but it has been completely sideways and dormant all year. And it is just oscillating. This is either a consolidation before rallying higher. It's got about a 30% upside move if it breaks to the upside, which to me would be like a blow off move in the stock market just before something ugly happens. But that 30% rally would take probably 3 or 4 months to happen. If this is a topping pattern and it breaks to the downside, we're going to see a really sharp drop. 15, this is the Russell. So the Russell could fall 15 or 20% or more very easily. And so we got this divergence. No one wants into these risky, smaller stocks. And then you go and you look at the SP 500, which is, the big blue chips, the big comfy stocks, they continue to move up. And we keep seeing, money move into these stocks as a defensive play. The market's going higher with fewer and fewer stocks supporting it. It's like, everyone's piling into Apple and the big tech names. They're doing all the heavy lifting, yet most of the stocks and sectors are actually struggling, which is not a good sign. And my systems are actually pointing to potentially 1 or 2 days away from a sell signal in the stock market based on cycles, based on technicals, based on market internals. So there's a lot of things unfolding that are pretty ugly underneath the hood of the stock market when you look at it from a technical standpoint.
It's rough times ahead, that's for sure. And all technical indications, I think, across all markets, commodities, everything, it's very fascinating. And with that, let's say I'm looking to allocate $100 million across cryptos, stocks, commodities, bonds, whatever it is. From your perspective and what you do for investors like that, how would you advise me in terms of spreading that out in this, in this environment right now?
Right. So that is a really broad question. So every trader and investor has got their own style, their own personality, the way that they want to invest. So how to attack that question? Say they want to invest $1 million or $100 million. I have certain assets that I like to focus on. I like to focus on the stock market. I like to focus on bonds, and I like to focus on cash positions, which are very rarely used, but they are needed at times because the stock market can crash, bonds can crash, everything can crash, but the dollar can actually be the only really safe haven. And we saw this during the pandemic. We've seen this in other bear markets. It's those are the three.
Well, let's look at it this way then. So let's say I've got 20% in cryptos and I have 80% in cash, and I want to get some yield right now. Is there any reason to get out of that cash position right now and hunt for yield? Or should I just maintain course?
Right. So, I mean, right now, so this is my kind of investor institution trading strategy. So the way this works, it's the SPY daily chart. And what I focus on are technical trends to the upside. When the bars are green, you want to be long the stock market. So either long stocks, long the best sectors, or you just buy an index ETF like the SPY. You're going to be wanting to pull profits off along the way. And then when the market resets and goes red, that means the market from a technical and internal standpoint is breaking down and there's potential for a much larger correction. When it goes red, that's actually when we move to bonds or cash. Sometimes we move to bonds, other times we move to cash, because sometimes actually bonds just aren't a safe haven. They'll actually fall in value even when the stock market is falling. So this is the type of strategy that I would deploy for, and I do deploy for large amounts of money. I just move into the index. I trade these long trends. We're very close to getting red bars here, and the market is primed and ready for a pretty significant haircut. We could see a drop to the 200-day moving average. It could be a very decent pullback. We could see a consolidation, just like we saw back in 2020 over here. Potentially it gets worse. Potentially we see some type of precipitous waterfall. But so if you were to invest money, I focus on the indexes because it's the most liquid. Getting into stocks, options, cryptos, a little bit different of a game if you've got huge money. The indexes are great. There's a million ways to trade it, tons of funds, ETFs. And it's slower moving, but when you know when to be in and when you know when to be out, when you can avoid those sideways or those market corrections, you really get a lot of alpha out of it. Especially when the market collapses, you can move to bonds. In some cases, bonds can move, 7, 10, 15% in your favor while the stock market crashes, which is what happened in the COVID crash. Bonds rallied like 30%. So pretty amazing opportunities. And when you go back in time and you look at some of these other opportunities in the markets, bonds rally in some of these times where the stock market really just shakes people out and goes sideways or sideways here. Bonds actually rallied during these times like 7% in only a few weeks. So you move from stocks, you go into bonds, and then you get back into stocks and back into bonds. A little more active of a strategy. There's generally like 5 or 6 trades a year based on this kind of position trading. But this is the way that, institutions can kind of move money. If they want to move large sums, this is the way that I do it with my investing account. This is, big money kind of asset that you can play with, because $100 million is a ton of money, not something easy you can just throw into a bunch of different things. You really have to spread it out a lot, or you get into the most liquid things. The nice thing about a strategy with the indexes is the max drawdown is about 6% on this type of strategy on the SP 500. And that's with no leverage. You could use leverage all you want, but the core strategy is rock solid, slow, and it's all about, avoiding the drawdowns and keeping them minimal to me.
And that's the real question, mainly yield. And so ETFs, how do you feel about ETFs as a storage vehicle for cash?
I think ETFs are great, like the SPY, the big brand name ones that are solid, non-leveraged. When you get into the leverage stuff, they seem kind of shady. They have risks, but ETFs, I mean, you get your dividends, you get into these. I mean, it's just like owning the index, and I think they're the lowest cost way to get access to the market and trade them. You get all the benefits. So I think they're great. But when you get into 2 times, 3 times ETFs, or you get into like ETNs, the exchange traded notes, like I think UNG, there's a bunch of oil and commodity ETNs. They're a little bit different of a game. You carry a lot more risk. There's different tax implications. So I'm all about keeping it simple. Follow like the major key index and bond ETFs. They're liquid, they're rock solid. As you move away from those, your risk goes up with all these little ETFs that are in little niche sectors and all those things. Risk definitely gets riskier.
Yeah, well, and I didn't preface the question with from a preservation of capital perspective, but you answered it that way. So that was a great answer, and I think a great way to preserve capital, number one, mm-hmm. maybe find some yield, number 2, and definitely avoid risk, number 3.
Yeah.
Yeah. So anything else you wanted to share?
Let's just take a quick look at the markets here. I think where we're getting in the stock market, I'm just going to zoom out a little bit, give everyone a view of what happened before we saw the last major market correction. If we go back to the last market correction and we go back to bonds, this is an early telltale sign that I think there's a much deeper correction coming in the stock market. Now, this is the bond chart, and this goes back to 2019. Bonds put in a big rally and then traded sideways here for several months. And then they started to break out and they started to outperform the stock market. Well, then we had the COVID spike in bonds, and then bonds completely crashed again. But what we're seeing right now is we've had bonds go out of favor. They put in a bottoming pattern. They have recently broken out just like they did over here in 2020. And this is an early warning sign that big money is moving into the bond market. They're trying to get defensive. They're trying to protect their capital because I think they obviously see rougher times ahead. They're starting to liquidate some of their positions, taking stocks and moving those into bonds. And if they're going to keep selling, then they're going to continue to drive the market lower. Eventually, they'll take over and they'll crash the market. So we're definitely seeing an early warning sign with bonds. Now, another thing to quickly look at are the utilities. We're the utilities ETF here. Utilities are forming a bull flag. They've had a strong run this year. They've been flagging down. They're starting to outperform the stock market. They're starting to move up here. If they continue to move up, a measured move will bring us right up to the COVID highs. And if utilities start to do that, it's going to be very similar to the breakout we saw before COVID, where we saw utilities rally up. They outperform the stock market, just like bonds did. And so if we see utilities move up and they outperform the SP 500, that's going to be another red flag that big money's getting defensive into, everyone needs utilities no matter what happens in the economy. They pay dividends. So they try to get defensive into these and that'll be a warning flag. Now, keep in mind, these defensive sectors are not safe havens. When the market crashes, these things crash with it. It's just what investors tend to do. They naturally want to go to these, what they think are safe plays, and they are safe plays for a little while, but eventually they roll over just like the rest of the stock market. So got to be really aware of that. So we are getting closer to a deeper market correction. We're not there yet. And I don't ever pick tops. I always wait for confirmation. I never get out near a top. But there is one definitely coming. I can feel it. I can see it in the market internals, but you never know. This market can climb a wall of worry way longer than you ever want to try and short it. So we'll just wait for that to happen. And then we'll take action with positions when that unfolds.
Well, I think the only person on the planet who can call the exact market top to the second is going to be Powell.
Yeah. Yeah.
And I think he'll be the catalyst, but interesting conversation this week from the Fed. But so we'll wrap it up here. Let's talk about your project that you're working on. I know you're passionate about helping kids, educating kids from a financial standpoint, and you are launching a new program. Everybody that watches my channel knows I'm all about education. I'm all about entrepreneurship and investing in yourself. So tell us about what you have going on. I think it's very exciting.
Sure. Yeah. So My team and I we're starting this new platform called Early Start. I can actually quickly share this screen here. So we're starting this earlystart.com, and we use early spelt like an Earl because we're teaching kids to become entrepreneurs online. Obviously, we are in an online world right now. And what we want to do is we want to get kids to learn how to build a landing page, how to build a one-page website. And I've done this with my daughter. My daughter's taught some of her friends, and they're all selling things online, mostly baked goods and crafts that they make for local pickup, but they can share it on their social media. And of course, their parents share it. But they get this huge reward, this confidence boost. They are their own little CEOs, their own little bosses, and they absolutely love it. And so we're putting together this program. We've gamified it. So when these kids finish these little steps on each little step to build these little pages and these little web businesses, they get rewards, they get points, they get bonuses, they get climb the rankings and get badges. So they're actually like having fun playing a game, kind of competing with their friends and other people on the platform. And in the end, they end up with their own product, their own business, and it can generate hundreds of dollars a month. And it really just sets the tone of entrepreneurship. They realize, oh, wow, that they can create something out of thin air themselves and be kind of independent. And so that's the whole kind of game plan of what we're doing. And really kids ages 8 and up can do it. And the program is my daughter and I building her web page or her web business, her first one by scratch, sharing our screen. And we've got, we just have fun doing it. There's lots of bloopers, but we're going to be building another one live, and kids can follow us along and build with theirs. It's really going to be a fun program. We want to help thousands or, millions of kids around the world build their own mini online web pages, web businesses, get their feet wet, and have a lot of fun doing it. So, I mean, if you spark the entrepreneur spirit in a young age, really you grow up realizing you can do anything you want. You don't have to work for somebody. You don't have to be flipping burgers. You can really just be creative and take advantage of chaos. Like COVID has created so many new entrepreneurs, so many opportunities. And, my daughter, for example, has been baking these homemade kind of organic dog treats and selling them. Well, she's getting tired of actually making them, which I was hoping she would get tired of, because I want to show her that, hey, why don't we create a little guide on how a kid can start a dog treat business, the recipe, how you set it up, how you do the social marketing, the little signs and the images. And we put it in the guide, and you can sell the guide for like $1.99 or $4.99 or something like that. And she can sell a digital product now, and she can offer it to the whole world. And she's like, I won't have to bake cookies anymore. I'm like, nope. She goes, let's do it. And that was just last night. So she's super excited for the shift that she can sell worldwide. And it just opens her mind. And I know when I do some marketing and campaigns for products, I have her hit my send button, and she can see sales roll in. She knows the power of an email list. She has written little emails to her little lists. I mean, it's just amazing. So that's kind of the plan of what we're trying to do. So if anybody's interested or wants their kids to do it, they can go to earlystart.com and sign up. And August 30th, we go live, launch it. It's going to be a blast. And I can't wait to help kids and have thousands of kids feeling like entrepreneurs or becoming entrepreneurs.
Yeah, that's awesome. So people can go to that website now and like sign up to be notified when you go live and everything.
Yeah. Yeah.
Okay, cool. I'll put that URL in the description below so everybody can check that out. I love it. So I have all girls, and 2 of my oldest are entrepreneurs. They have their own businesses. They learned from me. I'm a natural born entrepreneur. Have been self-employed since 1997. And what I love about this time right now, my youngest daughter is getting ready to go to college, and she wants to be a journalist. So I've talked to her about the entrepreneurial side of journalism and the things that she can do there. Because of what you said, in this day and age, especially now more than ever, I think it's the best time we've ever seen in history to be an entrepreneur, especially a digital entrepreneur. And that comes in a lot of forms and fashions. You can sell physical products, digital projects, services, all kinds of things. You can do anything in the world from anywhere in the world. That's what's so cool about being an entrepreneur today versus when I started. When I started it, you didn't have a computer. We didn't have the internet. We didn't have all these things. I had to advertise in the newspaper and phone books and signs and knocking on doors. Yeah. So it's a whole different world now, and giving children these skills at a young age, I think is just huge, so that they can just, like you say, push a button and pay the rent. You know, you want a swimming pool, push a button, you know, and create yourself a swimming pool. And it's really interesting. One of my people that I followed over my career, or I used to, was Zig Ziglar. Read all his books, took a lot of his courses, and
I've been to some of his presentations when I was a young kid. My parents would drag me there, and I got pulled up on stage once with Zig.
Zig is, oh, he's awesome. You know, just incredible motivational speaker, sales trainer. I mean, he was the guy at the forefront of all that. But one of the interesting things is there's a video out there, a day in the life of Zig Ziglar, where he talks about, you know, how he operates day to day. And he worked out of his house, and he said, you know, I'd get up and I'd go get exercise, and then I'd hit the computer and write. And what he said was, if I wanted something, I would write it into existence. If I wanted a swimming pool, I'd go write, and I'd earn the money for a swimming pool, you know, write a book, you know, write whatever it was, a course. That's how he paid for the things in his life that he wanted. And, you know, really, really awesome. And that's what I tell a lot of people is, the one thing, the mindset shift of an entrepreneur is, it's not, I can't afford it or I can't do that. It's how can I afford it? How can I do that? And when you think from an entrepreneurial standpoint and give it to children like you're talking about, you're giving them a freedom in their life that they just can't experience any other way.
It's priceless. Yeah. And when people understand that, you know, kids will catch on, but most people don't understand marketing, copywriting, being able to write your thoughts and convince people and sell ideas. Like, copywriting is the most powerful skill you can have. And it is absolutely amazing. Just like you're saying, you can literally sit down and be like, okay, I want to do something. I need to generate this kind of income. I can write down, I can create something, whether it's video or written, and then you can send it out. And if you help enough people with what they need, then you will become successful as well. And that's the whole thing. Like, just help somebody do what they want to do, and you will get rewarded. And it's like, you know, it's such an easy mindset. Just find something you're passionate about and that people need, and just help them. And the rest just kind of falls together. And that way you love what you do, and none of that job just over broke. You kind of hate it. You dread waking up on a Monday morning. So, I mean, I love the idea of the freedom that entrepreneur gives. I mean, sky's the limit from anywhere in the world, anytime.
Well, you've been living it for how long?
24 years.
24 years.
Well, since I was a kid. I mean, I was the lawn barber in high school. I've always had my own little trailer and barber pole, and I did landscaping. I've done all kinds of stuff. I had my own healthcare business, sold that. I've done a lot of different businesses.
Oh, that's awesome. The lawn barber, man. I was just Greg, the kid down the street, knocking on your door. Hey, can I cut your grass, rake your yard, whatever you want? I need some money. I'll do anything.
Yeah. Yeah. Great.
That's awesome. Well, Chris, I appreciate you carving some time out. And I'll put that link in the description so people can check that out, as well as your company. And, you know, thank you for sharing your time and your wisdom today. And I look forward to the launch of this project. It's going to be exciting.
Yeah. Well, great. Thanks for having me, Greg. Appreciate it. Take care.